Hey guys, you want to take advantage of this Johnson & Johnson distribution of Kenvue? I want to share with you some details about that transaction that might be helpful for you for your portfolio. And secondly, I want to update you on my portfolio. I've been making some structural changes to that and then what I share here on YouTube. As you know, transparency is important to me and I want to share with you what I've got going on. So we got an exciting video going on today and I'm looking forward to spending a few minutes with you. Hey guys, Kevin Burgess back again with another video, and today we're going to talk about Johnson & Johnson. I've seen a lot of information out there about Johnson & Johnson. A lot of it is accurate, but I've seen some things that might not be quite accurate, so I wanted to share with you, at least from my perspective, in reviewing the S1 documents, what I believe is happening with Johnson & Johnson and Kenvue, and how then I plan to kind of play that in my own portfolio. And then also my portfolio has taken some structural changes. I haven't made a lot of stock transactions, but I have changed the structure of it. So I wanted to share some of that with you today and again, share my portfolio with you because I think it's important that I share with you what's going on so you can see that these are real conversations that I like to have because these are real dollars for me. This is my portfolio. It's not a fake portfolio, and I share with you my whole portfolio. But before we get into that, I have an accounting background. I worked for a Fortune 200 company, at one point having responsibility for the SEC reporting. That would be the 10Qs, the 10Ks, and then closed out my career as vice president of risk and internal audit. So I know my way around a financial statement. So I want to take some of that experience, look at the S1 and the information from Johnson & Johnson and Kenvue, and give you some takeaways from that that might be helpful for your portfolio. And as you know, this is for entertainment purposes only. I'm not giving financial advice and never will. But I think it's important for us as members of this dividend growth community to work together on finding the best investments that we can make. And because of that, I want to dig into Johnson & Johnson a bit and share with you some of the details. And if you like content like this, please give me a thumbs up. It will let others know that the content in this is worthwhile, worth listening to. And also, I'd love for you to subscribe to the channel so that we can stay in contact and grow our portfolios together. Hey, before we get started today, what a cool experience to be on with Russ from Dapper Dividends. If you haven't seen that video, I will link that in the comments below. But we had a great time just kicking it around, and Russ is a cool dude, and so we just had a great time. And if you haven't seen that video, I'd love for you to take a look at that. We had a great time. So with that, let's get started. So first of all, I want to show you where I'm getting this information. It is their prospectus, and it was issued, I believe, on May the 3rd. So it's a pretty recent prospectus. Yeah, there it is. Prospectus dated May the 3rd of 23. And it's got a lot of information in it. You can tell here that it has 316 pages. I can't get that to highlight, but it's got 316 pages in it. I'm not going to go through 316 pages, but I did go through this, and I want to point out some really important and key things related to this distribution. So rather than flip through this document and talk about things, I decided to put a spreadsheet together to highlight the things that I think are important. So let's just kind of walk through this spreadsheet. You can see that the initial IPO shares, now this is an initial public offering that was offered, I believe, on May the 3rd. Those shares was about 172.8 million shares of Kenvue. I know this says Johnson & Johnson here, but this IPO is for Kenvue. So these Kenvue shares were issued as an IPO, which means that they went out to the public. So the public, through the open market, could buy some of these 172.8 million shares of Kenvue. Johnson & Johnson then still owns 1.7 billion shares, so 1716. That's 90.9% of the company. So the total shares that are going to be distributed by Johnson & Johnson of Kenvue is about almost 1.9 billion shares. So the first question I want to answer is, how many shares of Kenvue do I get per Johnson & Johnson share. So if you own Johnson & Johnson at the time of distribution, how many shares of Kenvue should you expect to get? And this is just simple math, right? I went and got the Johnson & Johnson shares outstanding. It's about 2.6 billion shares. There are 1.9 billion shares being issued for Kenvue. 102 million of those, 172.8 million of those are in the IPO. That leaves about 1.7 billion shares that are available for distribution by Johnson & Johnson to its shareholders. So I basically took the Kenvue shares owned by J&J divided by the J&J shares outstanding, and that means that we would get around 0.66 shares per share of Johnson & Johnson. So, for whatever that means, that is roughly what I believe we're going to see when these shares are distributed. The IPO value, this is kind of a technical thing, but I wanted to share it anyway. It's about $3.7 billion. And basically, they're saying that they're expecting to get $3.7 billion. That's about $21.34 dollars per share that Johnson & Johnson's expecting to get from the IPO. That is net of expenses. That IPO went active, I believe, on May the 3rd, and the distribution, and this is important, this is why I've bolded this, and maybe I can even highlight it a bit. The distribution of the remaining shares won't happen for another 180 days. So if I take May the 3rd and I add 180 days to that, that gets me to Monday, October 30th, 2023. So if you're looking for the distribution of Kenvue shares, you're not going to find those in your account until about 6 months from now. So I wanted to pass that little piece of information on as well. So this $21.34 makes sense because Johnson & Johnson is expecting the IPO to be somewhere between $20 per share and $23 per share. They're expecting the midpoint of that to be $21.50 per share, which is basically the midpoint between $20 and $23. You back away some expenses that they have to pay all these investment bankers and things, you get down to a $21.34 number. So now let's talk about this dividend policy, because that's what we like as dividend investors is the dividend. So they're looking to pay 20 cents. This is Kenvue's looking to pay 20 cents in their first quarter. That means if I annualize that number, that is 0.8 or 80 cents per share per year. So if I take that 80 cents and I divide it by the $23 per share, which is the upper end of the IPO, I get about 3.5%. If I multiply it by the low end of that, or divide it by the low end of that, I get about 4%. So it's somewhere between 3.5% and 4% is what Kenvue's dividend is expected to be. Looking at the midpoint, it's somewhere around 3.7%. So for Kenvue's dividend, we're looking at about a 3.7% payout, which is a pretty good yield. So now let's take this a little bit further. Johnson & Johnson's current dividend is $4.76 per year. If I back away from Johnson & Johnson, the consolidated Johnson & Johnson, if I back away Kenvue's 80 cents, that leaves me with $3.96 for the post Johnson & Johnson dividend, the post-distribution dividend from Johnson & Johnson. So the Johnson & Johnson value after the Kenvue distribution, I'm expecting to be, at least at current prices, around $147. So if I then take the Johnson & Johnson dividend of 3.96 divided by $147, I'm expecting a yield on the go-forward Johnson & Johnson entity of about 2.7%. Now, does that make sense? I think it does. I mean, let's take a look at Simply Safe Dividends here. The current dividend for Johnson & Johnson is about 2.9%. And moving back to our spreadsheet really quick, you see that the dividend yield at the midpoint for Kenvue is about 3.7%, and therefore the expected yield moving forward for Johnson & Johnson is about 2.7%. So that kind of holds together. So just a reminder, Johnson & Johnson has a dividend safety score of 99. That is the highest score given by Simply Safe Dividends. They have decent and consistent growth. They grow, at least the last 6 years, the last 5 years, they've grown by about 6% per year. Last 20 years, about 9%. Their latest was 5.3%. So I love this line. Look at that dividend growth. It is very consistent and it's a really good stock to have. I believe because it grows just consistently every single year. Look at this dividend growth streak of 60 years. That's a long time. That's longer than I've been alive. So I know it's longer than many of you have been alive. So that's a pretty good track record to have. Not to mention that Johnson & Johnson has a triple A credit rating, a higher credit rating than the US government. They're one of the two companies that has one of those. So this is a really solid stock that is a very consistent performer. And I think it's worthwhile to try and take advantage of this Kenvue distribution. So how do I plan to do that? What I plan to do is not buy Kenvue in this initial public offering. You're talking about 9% of the shares being out in the market. 91% of those roughly owned by Johnson & Johnson and held by Johnson & Johnson. Once the distribution happens, you're going to have a lot of volatility in Kenvue, but I do at least plan to maybe even buy more Johnson & Johnson and ultimately end up with both. I'd like to have this consumer products company. I don't have one currently. I had Kimberly-Clark at one point and ended up selling it about a year ago, but they've been so elevated that I have not purchased them since then. So I'd love to have Kenvue in my portfolio. It's going to be another 6 months, but I'm going to continue buying some Johnson & Johnson shares and just allow the Kenvue distribution to happen and keep both companies. That's what I plan to do. Obviously, you would make your own decisions for your portfolio and what you personally want to accomplish, but I thought I would share with you what I'm looking to do. Okay, guys, one final thing to point out, and this is actually pretty important. It is that the distribution, and this is on page 58 of their prospectus, the distribution of Johnson & Johnson's remaining interest in our company may not occur. It is intended to occur, as you can see in the middle of this paragraph. But, there could be things that happen in the next 180 days that could cause Johnson & Johnson to delay or even decide not to follow through with the distribution. So it is a risk out there, but it's just something that is helpful to know. They point this out in their risk section of the prospectus. I don't expect this to happen, but it is certainly a risk because it's pretty far out. It's 180 days, and anything can happen in 180 days. Now for the next part of the video, I'm going to catch you guys up on all the shenanigans going on around my portfolio. I have decided to change the way I share that. I have up to this point shared only the stocks, the individual companies that I've invested in. I happen to have some other funds that were invested in S&P 500 index funds. And so what I've done is I've taken those funds from where they were and I've moved them into the brokerage accounts that I have that I track for this channel. And I have bought the ETF called VOO, which is a S&P 500 tracking ETF. So I wanted to share that with you guys because I think it's important to understand that it is okay to have some of your portfolio sitting in an ETF that tracks the overall market. So about 30% or so of my portfolio is sitting in there, and about 70% I've invested in individual companies. And therefore, you're going to see different numbers now than you've seen in the past. So whereas the portfolio before was around 900 grand, you're now going to see it more in the 1.2 to 1.3 million dollar range. So just wanted to point that out. So if you've been a follower of the channel for a while, I wanted you to understand what the difference was in the portfolio. So I'm going to show you this portfolio. As you guys know, one of the apps that I use is called Simply Safe Dividends. It tracks my portfolio, adds everything together. So you can see the portfolio balance is about 1.2 million. So let's move down here a little bit. You can see that I have 45 holdings in this account. VOO now is the largest holding that I have. In the past, I don't know, 2 or 3 weeks, I've been easing some funds in there. And so you'll see that I'm up about 0.9% on that overall, 900 shares. It's about $338,000. Lockheed Martin, 5.1% of the holdings. Cummins is 4.7. Stanley Black and Decker is 4.5, and then Whirlpool is 4.1. The top five then includes Johnson and Johnson, which is at 4%. And you can see Microsoft is just knocking at the door here at 3.9%, looking to overthrow Johnson and Johnson. So let me flip through the rest of these. I will kind of scroll down and you can see what's in my portfolio. If you're looking for ideas, there's some stocks in here which are really interesting. I bought some more Parker Hannifin this past week, but then you can see, I'll just kind of scroll through the rest of these. They get pretty small down here. So there you go. I think that's about it. I will finish scrolling now. You can see I have about 3.5% cash left, about $42,000. I will be putting that to work slowly over the next month or so. So there you have it. That's an update on Johnson & Johnson. Hope that was helpful. Let me know in the comments below if you plan to keep or add to Johnson & Johnson, if you're buying Kenvue, or if you're doing neither. I would love to hear in the comments below what you're doing. I'd love to have conversations about these stocks. So we're in this together. We're trying to grow. We're trying to build our portfolios and be successful investors. So love to hear from you. Love to hear your comments. And with that, I will see you on the next video.